Some like to call it predatory shorting, illegal naked shorting. Elliott wave theory calls it ABCDE. Wyckoff theory calls it LPS, last point of support. Technicals can actually call this validation or confirmation of previous supports. I'm not saying that any of these theories are incorrect. In fact, what I am saying is that all of these theories have correlation to each other. Now, it's just how we're able to manage or combine the strategies together to gain the edge for that actual trade, right? So MossTube73 in Twitter, he actually sent me this message saying, and I actually mentioned it early in the morning, that COSM is about 1,300% in the short interest percentage, which is just massive, you guys. So now I want to be able to talk to you guys about some very, very important things here that I have actually put together as a theory, and I need some math people here. I need some people who know numbers so that we can be able to attack this together. Okay, so let's just go ahead and dive right in. What is up, you guys? This is ARCa coming at you with a COSM technicals and raw price action thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community and Discord called ARCab. But with that said, let's go ahead and dive right into the charts. But yes, you guys, I am looking at about a 13% short interest, which is usually not something that I tend to follow. Remember yesterday I was telling you that we may very well make that touch of 28 cents right at the bottom of our newly converted resistance into support. Okay, so what I mean by some people calling it predatory shorting or illegal naked shorts is there isn't anything wrong with that, because yes, the float it's how is it being shorted more than the float, right? So in my case, I call it a validation of support. Okay, so when the institutions or market makers or high frequency traders or scalpers, they see the opportunity here, and then they see whoever is studying formations sees the formation, and then they're able to actually hide their, they can potentially hide their naked positions by giving it a reason, meaning that they open up at this bearish signal, which we called a couple days ago, and then they'll short it. They'll short it all the way down to the relevant supports. And the reason why I can tell you is that they can hide it is because, first of all, let's look at this. Okay, so let's take a Fibonacci retracement, an inverse Fibonacci retracement from the previous day swing low to the day before that swing high. And with that result, you can actually see that this candle from today came to realize at the 1.618 Fibonacci ratio. So this is a very special ratio because I've mentioned so many times before, it is the golden mean. It is the golden ratio. This is a very, very popular area for the trade to take the price action to. Okay, another thing, I usually mention to you guys that I like to keep my gaps in play all the time because we may use them as supports or relevant points of resistance. Take a look at this. The gap from over here, we actually touched right at it and we bounced. Okay, so these are technical targets. Sorry, guys. And it's important to be able to gain some knowledge in every aspect of the trade, so that you guys can be able to have a deeper edge. This way, we'll see fundamentally what's happening with the illegal shorting. We'll see also technically what we can do as far as price action, and within the theories, you'll also know that we could potentially be building some type of a structure like Wyckoff, like where they're saying the previous points of support, or LPS, right? So in Wyckoff, you look at previous points of support before bounces, and in this case, it may as well have been one of those. Okay, so I did mention that I had a stop loss at 46. I actually did let go about 35% the position at 46, and I am actually waiting to I actually may get stopped out one more time at about, I do have it at 28, but now that I'm thinking, I may actually move it down to about 26 so that I can catch the 28 as an entry for the 36%, for the 35% that I'm already stopped out at. So this is just strategic planning, you guys. Know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as a form of entertainment. I can't actually suggest for you to buy or sell any assets. Okay, so do your own DD and we'll be okay. All right, so now that we have this out of the way, and you can see that it is playing it's playing math. You know, it's actually going down geometrically. So we're doing good. Okay, so let's go ahead and take a look at our. I'm sorry. Aside from that, if you remember the run-ups that we got based on the previous short interest which was about 680%, we got like a 1,000%, or I forgot how much ridiculous percent we got for a run up on those numbers. So now it's at 1,300. Like, what's gonna happen? I mean, is it viable for us to just take let's see, what's that overall gain? So we're looking at about 1,100%. Is it viable for us to multiply this times 2, since this was the result of 680% coverage? What? So are we really going to the moon here? So I don't know, but it's just speculation. And speaking of speculation, this could be one of the most important parts of the video that I need to talk to you about. Okay, so just like I said yesterday, please, I know that there's a lot of interest in COSM, and there's a lot of people trapped currently right now. Okay, so please watch the video all the way so that you catch every single detail I talk about. Don't bash me on stuff you don't know about, okay? Make sure you watch it first and then comment, because I may have answered your question all the way down the line. I'm going to try to make this video as fast as I can, by the way, okay? So I started to notice, first of all, our descending channel and the pennant are both invalidated, okay? We actually did talk about this. The potentials of it being invalidated have always been in the table. Okay, it's funny that the price action today actually ended up at our ascending triangle support before a bounce, and also the fact that we touched at the knot 618 at 34, almost 35 cents, is just incredible. It just further validates that the institutions and whoever else is mathematically playing this asset. Okay, so nonetheless, we are still in a higher high basis. The thing here is that we have these what you can consider as a macro touch just within the 4 hour. Okay, I can't explain it to you in any other way other than this. I just want to make sure that the laymen understand me too, and the beginners. Okay, so we are making a series of higher highs still. So we're still making that ascent. Okay, you guys. So now this is what I started noticing. If there's any math people in here, if you catch any patterns within this, then you let me know. But the first run up, we actually got a 40% lift. Second run up, we got a 40% lift too. The third run up, we're looking at about a 60%. The fourth run was a 60%. Okay, well, those numbers are looking incredibly alike. Now, I was talking about a decline from I'm talking about, yes, the first run up, but the decline from the first run up was 40%. The decline from the second was 40%, and so on. Okay, so these are the numbers that I'm getting: 40, 40, 60, 60. Okay, so now, I started to measure the upside thrust based from the beginning of the run. So this measurement here is actually taken from the bottom of this candle, of course, so that we can run up to here, and we got a 70% run to the upside. Now, upon the loss here, I measured from this point to this point, getting me at about 140%. Okay, so now the sum of these two figures is 212, which 212% actually takes us to the knot 618, where we are now at. Now, okay, here's where I'm starting to get a little curious here. Okay, so the run up from this decline here was 470% to this candle here. And then the drop that we got from here to here was about a 200. I'm sorry. Let me see. I'm sorry. The run up that we got from this point to this point was 230%. So now the sum of these two equals 703.77%, which ends up at about $290, which is very, very confluent with our overall price objective of the formation itself. It's leading us to $287. $2.87. Okay, so this is speculation as hell. Okay, so I am looking at $2.91, $2.92 here, and we're getting a suggestion from the objective of $2.88 or $2.87. So there's a lot of confluence happening right here. So if there's any math guys out there and you see something that I can't see, I mean, believe it or not, I'm actually not that great at math. So I wish I were better so that I can be able to apply more of an edge. But still, knowing some basics of statistics and whatever else does help the trade. So this is what I'm looking at right now, you guys. So I'm actually not saying that this is the bottom. However, it is a massive recovery that we got. We ended up closing right at about 46 cents. And I honestly don't see this may not be the bottom just yet. And it's particular to what I was talking about here. Since we're so close to the newly converted resistance into support, we may as well actually come back down and confirm it before continuing on to the upside. Okay, now if you remember yesterday, I talked about the MMAT descending broadening wedge as well. And when it ran all the way up, it came back down just shy of the newly converted resistance into support before making just an astronomical move to the upside, way past to where it actually had ended. Okay, so imagine MMAT came up to here and then it came back to right up at about this area and then launched just way up. Okay, so there is the potential to where this can be loading something interesting. The fact that the 1,300% short interest actually came in and then started to decline just tells me that this is a good way for them to be able to hide how they're doing their short thesis. They're shorting it based on Fibonacci retracements and or previous resistances and supports that were confluent to prior price action. So that's what I'm looking at so far. Now let's go and find our new divergences within the RSI. This is I actually said yesterday that I wasn't even going to mention, or the day before I think, that I wasn't even going to mention this because there could be the potential to where we're loading some drives of bullish divergence, and of which actually today two of them were confirmed. And on the 12-hour chart, regular bullish divergences happen when the price action is making a lower low and the RSI is making a lower high. Okay, so in this case, we are looking at 1 and 2 drives which are located right here. So this is the lower low of price action. Okay, and we're looking at the lower high of the RSI signal. So in this case, since we're going through all this price action like this, it leaves it a little bit like you can't actually tell. It's hard to find. So when this happens, it's called phantom. Okay, so we have 2 primary drives of phantom bullish divergence in play now. I can't say that they're going to continue on the way up from here because of what I'm mentioning of the test down to here. So we do have a relevant support from that gap, which actually could be used as well as a form of support before a continuation onto the top. But I honestly, my loading zone would be between 31 and 27 cents, or 31 and 26 cents, so that I can be able to gain a good entry upon the validation of this newly converted resistance into support. Usually we want to be able to not just catch this point here, and it's very dangerous to just do this here, because this is essentially a breakout trade. Okay, this is a whole strategy. So upon the confirmation or validation of support here, we want to be able to close a minimum 4-hour candle on a closing basis, okay, above this area here, which could be 27 cents. So if we're closing candles 1 hour, 2 hour, 3 hour, things are looking good. We just want to make sure that we can get a minimum 4 hour, to my preference, okay, in my strategy. Let's go ahead and open up a multi-pane so we can get an immediate short-term guide for the next days. So let's open up the 30-minute RSI profile here and take a look. So for the new viewers, new listeners, I have actually made a diagram here for you to be able to follow my RSI properties. So this is 1, 2, 3, 4 zones. You can find them right over here blown up. Okay, so just tag along and we'll finish this video soon enough. Okay, so in the 30-minute time frame, we are looking at a bullish cross above the moving average represented by this pink line. The RSI signal is the purple line, okay? So you can see that it's actually not giving us a bias in direction. The only reason that I believe that this may continue up to a short-term upside before being rejected right back into the bull strength percentile is the fact that we're at that border. So when we're at this border, we're likely to be gravitated into the bear weakness percentile, followed by a continuation to the way down. Bi-hourly is suggesting continuation to the way up, but like I said yesterday, when we're looking at shallow areas here, in the shallow areas of any zone, any of the 4 zones, we're likely to be gravitated back into the prior one. Okay, so now we're still in the shallow areas of the bear weakness percentile, and the moving average is giving us kind of a hint that we're on the way down. Okay, so there could be a potential to where this has a small lift, catches the moving average, and uses it as a form of resistance, kind of like here, and then just continues to the way down. Okay, so now the 6-hour time frame is also very much literally in the smack middle of the RSI. So it is suggesting an upside, but again, since we're right in this area, we could be facing some sideways trading, for the first few hours of the session, followed by some downside or a further capitulation to the downside, thus confirming our newly converted resistance into support before a continuation onto the upside. Okay, there is the potential too to where we can actually flash down here and stay down here and face that sideways trading and continue. What I'm thinking as the sideways trading is actually because we're at this gap support, we can actually face some sideways followed by that fall and then a continuation onto the upside. It's interesting watching these videos the next day as I see what I said, and this is called forward testing. I did this so often that I was able to see how the RSI and how momentum reacts to the price action, the following day. So this is why I'm telling you what I'm telling you. Okay. So now a very important one to keep in mind here is the daily, and the daily is still suggesting a downside continuation. Now the daily could very well continue to the downside right here, but I do have to mention, and this, I'm not sure that this is going to play out because it has made a bearish cross below the moving average. It is sitting at the very deep areas of the bull weakness percentile, which means usually we can be gravitated into bull strength. So in this case, we could actually face some more downside. Hopefully we can reject the weakness or the shallow area of the bull weakness percentile and bounce up. Let's see the buy daily. Buy daily is still suggesting an aggressive downside. 3-day is still suggesting an aggressive downside. So yeah, you guys, I definitely think that this, FOMO can actually change this entirely. So upon the short coverings, if they cover right at these areas, at the technical areas, then there's a potential to where this can actually trigger a FOMO event and just rocket ship this thing to the upside. Okay. So I'm actually still bullish on COSM, and more because I think that there's an opportunity to trade the volatility or trade the sentiment. Okay. So but with that said, I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, please don't hesitate to reach out to me within Twitter or Discord. I'll make sure to leave those links in the description below for you to consider joining the ARCa trading community. Okay, but yeah, I wish you well. I wish you a good night, and I will catch you at the bell mañana. Adios.